What's up, strategic investors? We're here to bring you breaking news regarding cryptocurrency and macroeconomics in a simple way that's easy to understand. This is one of the most volatile periods of history in the last several hundred years. Economics and cryptocurrency has never in history been as important to understand as it is today. We're looking to build a community of some of the brightest minds in all of finance. Asset management is like a game of chess, and we're always looking to stay one move ahead of the competition. Subscribe to our channel to become a part of the most comprehensive upcoming communities in cryptocurrency and economics. So enough with that, let's get to the content you all came here to see. What's up, strategic investors? Today we're going to be talking about some crypto, and we're going to be looking at some patterns that you've probably never seen before. These charts paint a picture of not only just Bitcoin, but Ethereum and the total crypto market that a lot of people really haven't seen this perspective. I'm still not exactly sure what to make of all this information. I just know I find it incredibly interesting, and I'm sure it's relevant to be looking at to get an idea of what's going to be happening in the future. So with that, let's dive into it. So it's been a couple months since we actually put out any content. We actually just put out a video this morning, so go check that out. But since we actually made any content regarding crypto and Bitcoin, it's been a couple months, so I just wanted to do a quick update. And just last time we talked, we were talking about breaking out of a rising wedge and coming down to retest our lead-in support, which was about 30K. And our goal, or I guess our target, if we broke the lead-in support for Bitcoin, was going to be around 15 to 17,000. And since we made that video, we have done just that. We broke the lead-in support, and since that, we have taken a nice drop down and retested 17, and we are currently hanging at just over 21,000. So I would like to make one quick update to our analysis, and I believe our target of 15 to 17 was maybe a little bit more optimistic than I feel at this point in time. So since we made that video, I think it's a little bit more likely that our bottom range is going to be from 13 to 15 rather than 15 to 17. And we'll explain that throughout the rest of this video, but just wanted to give a quick update regarding our last videos just to make sure everyone's still on board that remembers those. We did some updates on Twitter regarding our bottom range targets. So although we didn't make a video, we have been trying to do some tweets here and there. It definitely doesn't take as long to post a tweet as it does a video. Some of this editing is quite the process. So yeah, I guess follow us on Twitter to keep up to date and get some more timely analysis on Twitter. So our Twitter handle is _investor_prod. So go give us a follow and you can get more information there. So I actually found this pattern right here on Bitcoin, I believe it was last year, and I've found this to be extremely interesting as it is very predictive and very consistent ever since the inception of Bitcoin. And more recently, I've taken the same pattern and looked at a couple other different charts using this pattern, and I found the rabbit hole only gets deeper. So let's start with Bitcoin, and we can just go through the whole thing, and hopefully by the end, you've got a new perspective that you can see crypto markets from. And I believe this perspective is going to give you a head start going into the next bull market as to where to be focusing your energy. So I find it to be very relevant, maybe not as much for calling short-term levels or anything like that, but just to understand the personalities of every individual coin and the total market as a whole, I find it incredibly valuable. So just a quick rundown of what these lines actually mean. So these white lines right here, this was pretty illiquid at the beginning, so you could kind of call that a lead-in support, but not really. But basically, this line predicts the high, you come back down, and I guess you got the lead-in support for this move right here. You can see this was support, 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 and then you really took off into the blow off top. And once you hit this old lead-in support line, it now became resistance, and that's where you put in your top. And you come back down, you find the lead-in support line for the current cycle, which would be this white line. And as soon as you drop below it, sure enough, you put in a bottom. And you can see we had a pretty quick reversal way back in the day. And sure enough, we topped out at the old lead-in support line and came back down and hang around this lead-in support. And sure enough, as we got to our breakout point, we took off, and this lead-in support line for the previous cycle, once again, was serving as a resistance for the top of this bull market phase. And we didn't get a perfect top on it up here, but it was close enough to where it's pretty consistent. And you can see that we came back down, and as soon as we broke below the lead-in support, sure enough, we put in another bottom. And from there, we started building up our lead-in support line for this bull market phase. And sure enough, as soon as we had our breakout point right over here, we had our blow-off top, which the top was predicted by the previous cycle's lead-in support, as was previously and following, as you'll see. So we predicted the top up here, and we pulled back, and sure enough, as soon as we got to our lead-in support, we broke our lead-in support, and that formed our bottom for the next bull cycle to begin. And we had some nice momentum coming pretty fast out of the bottoming formation, and sure enough, the previous lead-in support line has now become resistance, and we bounced off there. We came back down, held our lead-in support line except for this wick, which I don't really count this wick too much in my crypto analysis because it was more of a liquidity event that didn't really have too much to do with the crypto markets. A lot of crypto investors don't really follow macro too closely, or at least at this point in crypto's history. So I look at that as more of an anomaly, and I like to use the actual candle body bottom rather than the wick as kind of the support line. I don't believe we actually broke below. Sure, we got the wick, but it wasn't sustained. So with that being said, we held our lead-in support, and sure enough, as soon as we got to our breakout point, we had our blow-off top, which was predicted by the previous lead-in support, and we pulled back, and we came down, we tested our lead-in support one more time, and sure enough, we broke it, and now we're here. So we actually don't know if this is a bottom. You can see once, twice, thrice were all bottoms. So I would believe that, history doesn't always have to repeat itself, but I would say at bare minimum, it tends to like to rhyme. So I would see this as a situation that should rhyme at least. So I would believe that if we're not at a bottom, we are extremely close to a bottom. So that's just what these white lines represent. It's pretty simple. It's just lead-in support that becomes resistance. So lead-in support for one bull market becomes resistance for the top of the next bull market as a function of time. So also we have this blue line, which is significant. You can see that this was kind of an inverse bump and run. You had your lead-in phase right here, your bump ran up here, and this blue line actually would be our first target for a pullback from a bump and run pattern. So this blue line is our first target. The beginning of the lead-in support would be considered our second target. So you might use this as our second target, which would be like 3,000. Or if you discount that because of this, this could be our start of the lead-in support right here, which would be around 7,000. But I honestly think that's extremely bearish, and I'm very reluctant to believe that Bitcoin's actually going to make it that far down. Anything's possible, but it is certainly not my base case. That being said, I also said that 15 to 17 was going to be my base case for a pullback in Bitcoin if we broke our 30K support level up here, and we came back down to 17K immediately, and I believe that 13 to 15 is more likely at this point in time. So maybe as this plays out, 7K will sound more likely, but I highly doubt it, but I guess we can cross the bridge when we get there, if we get there, but not my base case. Just another thing regarding these bump and run patterns and crypto, they tend to play out pretty frequently, and they tend to be pretty accurate in their projections. So if you notice, like down here, you had a nice support, and then you had a nice bump off of it. And sure enough, our first target would be the bump. So you come back up, you test it. It serves as strong resistance and support. And after that, our next goal, after you do make this support and you continue higher, our next target for this pattern would be up here. So you follow that over here, and you can see as soon as we broke that, that's when the blow off top happened for Bitcoin. So let's do the same analysis for the next bear market phase. You had the support all the way down, and then you had a nice bump. And then your first target would be breaking the point of the bump, which we actually broke it pretty cleanly and came back down, used it as support for probably close to a year, if not longer. And as soon as we came above that, our next target would be to break the beginning of the support. So that would be up there, this blue line. Sure enough, we break that blue line. We're off to the races for our blow off top of the bull market. So you don't always have to expect a bump and run pattern, but I find that throughout looking at crypto charts, they happen more frequently than I see in other markets. So it's definitely something I look for, something I pay attention to, and they tend to play out pretty accurately when they do happen. So just another thing I thought I'd point out, the main thing that we're going to be looking at today are going to be these white lines, though, as they really describe the life cycle of each individual coin. And when you piece them together, it gives a pretty good idea of what's happening in the total market. And it's a perspective that I find to be very interesting, as I mentioned before. So I don't want to say too much yet. We'll get into that as we get further on into the video. But for now, let's take a look at one more thing really quickly. So you can notice that I have this line drawn on here, and there's no good reason for it. It's very speculative. So while I think the anchor point for this line is logical, I don't necessarily believe that the angle of this range right here is correct. So it's more just a general idea of what to be looking at for a general range for a bottom. Like if you were to get a bottom down here at 7K, your angle, the degree of the angle, would be a lot higher than we've ever seen in anything in Bitcoin. This one down here was 22 degrees. This one down here was, I believe, 7 degrees, and I believe this one is 9 degrees. So if you had something that wide, you know, that'd be almost like a 45-degree angle. So I don't think that this angle is correct. I just think it's nice to show a general area of where to look for more specific and more logical support lines, like maybe this blue line. And the other thing that I want to mention is just because Bitcoin has bottomed doesn't mean that we're in the next bear market. I mean, the next bull market, excuse me. So as you can see, Bitcoin bottomed, and before it really did anything substantial, you know, you had the breakout up here, really. So it was 243 days. With this cycle, before it did anything substantial, it was 273 days. This cycle, before it did anything substantial, was 151 days. And you could even make the argument that this wasn't even substantial, and that would put you at, like, what, probably well over a year. So this one I don't believe would be any different. So just because we might have bottomed, or we are very close to our bottom, I don't think that necessarily means to be super bullish on the markets or expect the next bull phase to be starting tomorrow. As we talked about in previous videos, I believe that we're probably going to be getting the next bull cycle sometime around the next election cycle, which I believe is 2024. I don't know the exact month or anything, so it would put us out around here. So just game theory, if these lines do hold up, if we start in 2024, it's a year long. Let's just do the end of 2025 because I don't know the exact date of the election. I think it's towards the end though. That would put us up at a top around 250, 180 to 250. So Bitcoin's not dead. It might take a long time to recover. The next bull cycle will happen, and pretty early to call, but I would say that it takes us up to around 180 to 250,000. With that being said, you can see that we had a scare back here, and this lead-in support actually did not hold for this wick. And that was due to an anomaly that didn't really have anything to do with crypto markets specifically. It was an illiquidity issue in the global macro markets. So something like that, maybe not that specifically. I guess just to go on a rant really quick, typically following a liquidity crisis, you have a solvency crisis. So I wouldn't expect as much another liquidity crisis. I think solvency crisis is something more realistic to be looking out for. But as we hang on this support wherever the line may actually form itself, you might get some volatile bouncing in between these lines, and you might get a nice little wick down if we have another crisis, which I think is maybe not a probability. My gut says it is, but I try to stay pretty logical and data driven, so try to not jump the gun on too much. But I think if it's not a probability, it's a high possibility that we get another crisis situation like this. So even if this may be the bottom, we might get a wick down here to like 13, or who knows what it may be. You can't really predict that kind of stuff. That's what makes it a black swan event and makes it very hard to trade. So I just wanted to point out that something, we might have had a bottom, something like this, where we move a little bit higher from here, but there might be an event in the future that takes us down to test those levels one more time. Or even in our situation, because this line is a little bit flatter, it might take us down even to newer lows for a wick down here to like 13. So it's something to be aware of, something to be paying attention to, and something that is a high possibility. So this chart is very interesting, but as I mentioned, the rabbit hole only gets deeper. So with that, let's take a look at the rest of the market and hop over here to the Shitcoin Perpetual Contracts Futures. Alright, so immediately pulling up this chart, the first thing I notice is this chart is a lot weaker than the one we just looked at, which was Bitcoin, and understandably so. These are shitcoins, meaning they're low cap cryptos. Don't quote me on the exact definition, but I believe it's everything that's under $100 million market cap. It may be 200 million, but I believe it's 100. So the point being is it's these very small cap cryptos. So you have the illiquidity factor that brings the price down quicker. So it's understandable. And you can see that we broke the lead-in support. And once again, I don't use this pullback as too relevant information that, at least that I find as relevant, as it was more of an anomaly in the global macro markets as opposed to anything crypto related. So this lead-in support right here, you take it up and we break below, and we are actually now down here at this blue line, which would be our breakout point for the blow off top phase of our bull market in regards to small cap cryptos. So we actually did come down here. We didn't test it exactly, but it's close enough to where I consider it to be a retest. And this would be equivalent to, say, Bitcoin hitting like a 13K right here. This line, in my opinion. So what this is showing me is we had a pretty nice sell-off right here, recovered, came back down to newer lows, and since there, we've recovered, We tried moving back down after we hit our resistance up here on our SMA line, and came back down, made a higher low, came back up, came back down, and we did a double bottom here, which I would have liked to see us actually break out up here rather than coming back down for the double bottom. But we did put in a double bottom, which is actually pretty close to, say, like a support that would hold up this line over here also. So we're now up here retesting the breakout, which was also our support for this range right up in here. So this chart actually looks pretty strong in my perspective. I don't like buying resistance, but especially in a bear market like we're in, that's a good way to lose some money pretty fast. But I think this chart does look pretty nice, to be honest. So I think what I'm seeing here is a lot of the selling in the small cap cryptos has probably likely already occurred. You know, the liquidity of these coins is pretty concerning, so I'm not as confident with that, because you could just get a whale that comes in and dumps a few coins and absolutely tanks the market because there's no one there to buy them. So I'm hesitant to say this is a good buying opportunity, but I think the chart shows there's a little bit of strength, at least in the moment. We are making a similar pattern in junk bonds. So, you know, if we get a little bit more of this risk-on sentiment over the next week or two, if we don't see earnings miss right off the bat starting next week, I could see the shitcoins coming up here and maybe testing the high end of this range at a time where this SMA line might come back down and serve as resistance at the same level. But I don't really see shitcoins as being, at least as starting a sustainable rally at this point. If we did come up here and test these levels up here, that actually would give us some more room to come back down pretty fast. So as this recovers a little bit of strength relative to the rest of the market, it would give it some room to come back down and not just completely tear through all support and go to zero. So I think that is something that is looking more likely by the day. Although with that being said, this is a chart, and you know, it's supply and demand, which is important, but when it comes down to it, the global economy and the macro that explains the action in this chart is a lot more important in my decision making than the actual chart itself. So if we start seeing some more bearish data come out next week or the week after, or really any time this month, I don't think we're going to be quite as strong as this chart is looking like it very well could be. So, you know, the technicals are nice, but all this data that comes out and the actual global macro economy is going to be the trump card. So that's what really need to be watching going forward. All right, so this is a chart of the total crypto market cap. And the first thing that I notice on this chart is you have a long-term lead-in support line, this blue line right here. And this is dated back through several bull cycles. So you had your lead-in support here, your blow off top took you up here, came back down, lead-in support for the next bull market, blow off top, came back down, and this is actually the first time we've closed a candle body fully below this blue line. So this is a first, at least on the chart that we have available. And you did get a wick over here, but as we mentioned before, that was an anomaly regarding some other macro events regarding illiquidity. So I don't really put too much weight on this. This is something that is a lot more relevant right here. So we're breaking our long-term trend in the crypto market. You know, maybe this is something similar to a Bitcoin chart where after you break your lead-in support, You come back down, you form a line, and this lead-in support becomes resistance for the next bull market. And if that happened, if you extend this line out here, you'd probably get your top up here around like 16 to 32 trillion, which would be a huge move for the next bull cycle, but there's really nothing to suggest that. And this is a total market index rather than individual coins, so that's very speculative. There's nothing that suggests that yet. Just something fun to think about. And it might happen, but just gotta wait and see. But the interesting thing that I want to point out about this chart is it did break the lead-in support, just like the rest of the market, and we came back down, but it is holding above our highs from 2017 or 2018, which suggests that the total crypto market is actually holding up a little bit stronger than Bitcoin, and certainly stronger than shitcoins. So how does the total market look stronger than both Bitcoin and small cap cryptos? That's something that we're going to be getting to here a little bit down the road in this video, so I'll save that, but it is something we are going to talk about. But just to do some quick technical analysis on the total crypto market, just to get an idea of what's happening with the total industry. As I mentioned before, these bump and run patterns tend to play out in crypto pretty frequently, and they happen broadly across all the different coins, and it gets represented even on the total market cap chart. So you can see back here we had our resistance, 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 we had our bump. We came back down, we broke above it, and then held that line as support. You can see the dotted line right there is holding as support, and then you could discount this up here because you had a pretty nice pullback here, a couple pretty big candles, so this is really the consistent resistance point, or resistance line right here, goes from here down to the bump. So as soon as we break above that point, it's off to the races for a blow off top, and this is an inverse bump and run. Over here you can see that we have a normal bump and run, so we're holding our support, 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 and then we really take off from that line, and that's our bump right here. So we want to break this line right here, which we just did, which means our first target, I mean, technically this line is our first target, but that's kind of a confirmation to see that this pattern is actually trying to play out. So now that we've confirmed this pattern is trying to play out, our first target is going to be the point where the bump occurred, which would be right down here. And that's going to put us at about $400 billion as a total market cap for the total crypto market. So to actually make it down to this target level, that's going to require about $400 or $500 billion of outflow from the crypto markets. So just if you want to think about, all the coins I'm thinking about are projects that I actually like and aren't going to go to zero, but just for sake of example, if say EnergyWeb decides to go to zero and loses its whole market cap, whoop-de-doo, $50 million just came out of the market. We're looking for 40 or 50 billion, That's not something that a couple projects going to zero is actually going to make happen. So I think this suggests that if we do want to get this pattern to actually play out and reach its target, that some money's probably going to have to come out of Bitcoin, and it's going to have to come out of some of these large cap altcoins also. So I don't know what Dogecoin is at or Shiba Inu, but I could see a couple of those probably going to zero, maybe not zero, but losing a sizable portion of their market cap. And even some of these other projects that we're going to be talking about here shortly, that's going to play into my thesis for this last little move that we're going to get, if we get it, which I think everything suggests we will. And I don't know if it's going to actually come down to 400 billion, but I think we're going to make an attempt to breach this level of support and come back down and try to find support somewhere in here. You might find support somewhere around my cursor, that dotted line right there, or maybe even down here. I don't know, but I think we're going to at least try breaching this green support line at some point. All right, so now that we've looked at the total crypto market, let's come over here and take a look at Bitcoin dominance. All right, so in our last video, we were consolidating in this range right here. We were forming a falling wedge that was also representing a triple bottom with wicks. So I believe last time we made a video on Bitcoin was right around this period right here. Our projection was that Bitcoin was going to break out higher from this rising wedge after this triple bottom, and sure enough that happened. And the part that I find interesting since then is while we broke the resistance of the rising wedge, we failed to break out of this point up here. You can see that we had some resistance up here, right here, and it almost looks like a triple top now. So we pulled back off that pretty strong, and Bitcoin is now again losing dominance. We're coming back down, we're testing this rising wedge, old resistance, which is now support, and I would expect that to hold as a support, and probably Bitcoin to hold up strong against some of these other altcoins. Like I was talking about, I'm not super confident, but I think a lot of the small cap cryptos, maybe not all of them, but in aggregate, they've definitely lost a lot of their value. So I think probably a lot of the selling has already occurred with the small caps. So I would think that it's going to be market cap coming out of some of these other large cap altcoins that are actually going to take Bitcoin higher, or at least the Bitcoin dominance higher, not Bitcoin spot. And then just one more thing I want to point out before we leave this chart and move on is, if you notice the last bear market, it was pretty volatile at first. You had a huge rip and then came back down, retested, and then really made a sustained move higher until we got our bull market, which brought us back down to these levels. So it kind of looks similar to something like that, where you have a nice rip up and then a volatile rip down. But the point being is, it would make a lot more sense to have Bitcoin dominance going up in a more sustained manner to be a little bit more confident that we're putting in a bottom in crypto prices, at least for the medium and long term. So that's something I would like to see before I get a little bit more confident about calling that we're at a bottom. So that's something I will be watching in the near future. And with that, let's move on to Ethereum. All right, so this is a chart of Ethereum, and you can see we got these white lines once again, and you can see we had a lead-in support back here, and sure, it wasn't the best, but it was pretty illiquid back here. This is when Ethereum was first getting started, so use that as our lead-in support for this cycle. And if we take that out, and we can see that it does serve as support over here also, so I think it's good enough to use. So we have our lead-in support, and then we have a nice run up here to our highs in 2018, and then we pulled back down to the lead-in support line, at what time we got a bounce up here and came back up to the SMA line and used that as resistance before breaking below the lead-in support and coming back down here and forming a bottom, which actually was the same bottom over here, but it was the bottom that we actually used before resuming into the next bull market phase. So the thing that I find interesting about this is Bitcoin actually broke its lead-in support over here. So as Bitcoin was finding its bottom over here, Ethereum was still bouncing above its lead-in support for the bull market. And we didn't actually break our lead-in support until mid-2019. So that's when we really got our confirmed breakdown and capitulation moment in Ethereum. So what it looks like to me, and what I think this chart is actually suggesting, and what we can see with these white lines that we've drawn, is this bull cycle back in 2018 looks like it was more centered around Ethereum than it was Bitcoin, as the cycle was actually playing more around the price of Ethereum than it was Bitcoin. And you could actually see that being pretty relevant in kind of the mood of the bull market from that time phase. We had the first altcoin cycle where everyone got super excited about altcoins and they were all built on Ethereum, and it was just Ethereum was the big dog back in 2018. And the chart shows that the bull cycle was actually, in my opinion, structured around Ethereum rather than Bitcoin. So I find that to be very interesting. And you can see that as we came back down here, we found our bottom. It did form a new lead-in support line, and that took us into our bump up here and our blow off top for the bull cycle. And that was predicted by the lead-in support over here. And sure enough, we came back down and we're testing this lead-in support, which we broke, and that's where we're at now. So this line over here, as I mentioned before, is pretty speculative. I don't think the angle of this is correct. I just think it's a good way of trying to find relevant areas to find more logical support lines. So I think we might get a bottom somewhere around in here. So, sure enough, this is a pretty good, that dotted line that goes across looks like a pretty good support line right there. So maybe we get a bottom in Ethereum this bear market around 750-ish. So I don't think this is super accurate at the moment. I'm pretty sure I'm going to need to adjust it at some point, but I think it helps us try to find a range to find a more logical support line that might hold up as a nice bottom that we can target. So now that we've seen the personality and life cycle of Ethereum from this perspective and through these lenses, let's take it one step further and go down the rabbit hole a little bit deeper and hop over here to Binance. So with Binance, it was very illiquid at first, and we had this huge candle up here. So I'm using this more structural price action over here as a lead-in support, and you can see that we used the lead-in support over here and came back up. We didn't have anything else to compare it to, so we broke our lead-in support, came back down, found a bottom, and sure enough, after we bottomed, came back up, used this old lead-in support as resistance, came back down, held our lead-in support from previous, and that took us into the blow-off top for our bull cycle phase. And I actually think that if there wasn't quite as much craziness going on in the macro environment, that Binance actually was in a position that probably over the next couple months, it probably could have made a nice run up here to somewhere between like 18 and 2400, which is quite a bit, but I think it would have made a nice blow off top for the cycle. But this was also right around the time where the supplementary leverage ratio exemptions expired, and as we talked about in previous videos, this was a pretty bearish event for crypto, certainly, and really all risk-on assets in general. So I think we had some macro anomalies that held us back from actually participating in this last blow-off top up here, which is fine. We still had some interaction over here, use this as a resistance. So with this chart specifically, there's something I find very interesting, and that's when we got this bottom down here and this nice sell-off, which was the end of 2018, Binance actually recovered very fast and ended up making new highs immediately. So we broke our 2018, 2017 highs and set new highs up here. Although it wasn't too much higher. It was a new high, and that was something that no other crypto in the market had accomplished at that point. So just like Ethereum was kind of the centerpiece of the last bull market, you can see here that really Binance was the coin that brought confidence back and kicked off this bull market. And sure enough, I believe that this bull market phase was centered around Binance. And you can even see that in the bear phase. Binance is holding up very strong relative to all the other coins. So we could come back down here, test this lead-in support, and as soon as this lead-in support breaks, that might be around the same time we actually have our total market crypto bottom, which I would find very interesting, as Binance was the one who really kicked off this cycle, and it could be the one to kick off the end of the bear market also, and really signal our capitulation moment if we do get a drop down here, just as Ethereum did with the last bull market and last bear market. So it's something that I don't really have too much of a good explanation for. There's been a lot of people talking about network effects regarding cryptocurrencies, and I would not be surprised if it has something to do with that. I don't know too much about the sociology behind that, so I'm going to refrain from commenting on that until I have a chance to take a deeper dive into it. But just from what I've seen with these white lines and the pattern that shows up on all these different crypto charts, I believe that this is something to pay attention to going forward. And it's going to be interesting to see if there's another crypto that emerges similar to Binance that really kicks off the next bull market. You know, maybe it's a, I don't know, Polkadot or Cardano, or I don't know, one of those coins. It'd be crazy if it was a Dogecoin or something, but I highly doubt it. It'd be pretty funny. So fun to think about. I doubt it's actually going to happen, but maybe like a Polkadot or a Cardano, looking at the next bull market phase as being really the centerpiece of that bull market, and the one where all the attention is surrounding it and really leads the way for the rest of cryptos. So I don't know if there's quite as much that you can immediately pull away from this information, although I think it is a very relevant chart just to refer back to when you're not feeling as confident about the markets. It really puts things into perspective, and it's a pattern that's held up throughout all of crypto's history and really explains a lot of things that is difficult to explain without understanding these patterns and this perspective that we've just seen. So I find it incredibly valuable. I'm sure I'm going to find better ways to use this in the future, and maybe we'll see it again in some upcoming videos, but I found it interesting enough that I wanted to show everyone, and maybe you guys have some perspectives that I haven't thought about. So if there's anything that you've noticed about these patterns that I haven't talked about, please drop some comments in the comments below, and let's try to brainstorm what's going on here. And obviously there's something pretty interesting going on, and I'm sure this rabbit hole gets deeper. So for the time being, it's interesting, and I'm going to be looking for more ways to get utility from this information. So I will keep you all updated as I learn more about it. With that, I think we will stop the video. So everyone, have a wonderful day. Alright everyone, thanks for watching. We hope you all found this content valuable. If you did, like this video to let us know so we can continue to put out similar content. If you have any questions or comments, or if you have any suggestions regarding other topics you're focused on and would like to see us cover, just let us know in the comments below. And subscribe to our channel to become a part of the most comprehensive upcoming communities on all of YouTube. This economic environment only comes around once in a lifetime, and we're here to act like it. We're not here to talk you up. We're going to leave our emotions at the door and navigate these markets through the good and the bad. Keep in mind that this is not financial advice. This is more of a mastermind that we can all come together as a community and use each other's unique perspectives to better achieve logical conclusions. We really appreciate all of our team out there watching, and we look forward to continuing conquering these markets with y'all going forward. Until next time, stay one move ahead. Have a great day, everyone.